JPMorgan shares rallying again after posting their best week in some 2 months. Our next guest calling for more than 20% upside from here. He raised his estimates just today. Let's bring in top banking analyst Mike Mayo of Wells Fargo Securities. He's here at Post 9. It's good to see you.
Nice seeing you.
So last week you called JPMorgan the Nvidia of banking, and today you followed through by increasing your estimates and reiterated it as your signature pick. Why? Why all this love for JPM?
Well, I had a conference last week, Wells Fargo's research group. We had all sorts of big tech firms there. We had Amazon, Microsoft, Meta, Nvidia. And you know what was interesting about that conference was the praise JPMorgan got from big tech. So JPMorgan is the Nvidia of banking, and you're seeing growth in their consumer checking accounts 2 to 3 times faster than the industry. So that's over the next 1 to 5 years. But let's talk about the next year. And so we updated our earnings estimates, and JPMorgan reports earnings for the first quarter 2 weeks from Friday. And I think those earnings will be strong. In addition, we upped our estimates for the next couple of years because JPMorgan is one of the biggest beneficiaries of deregulation. So you have Goliath is winning when it comes to tech and their share gains. You have trading and strong earnings coming ahead, and one of the biggest beneficiaries of deregulation. So people are looking at, little pieces of the market and banks, and they're missing the seismic shift that's taking place at JPMorgan, best-in-class global bank that's expanding its lead.
Yeah, where's all this deregulation, though? Where is it?
People tend to overestimate deregulation in the short term and underestimate it in the long term. This is just like what I saw in the mid-1990s. No one cared until they were forced to care. So as you get people, you get policies, and as Scott Bessent has said, he wants to have more efficient regulation, more effective regulation, and empower banks more. So just listen to the Treasury Secretary. And Scott,
I know what they're saying, but where is it? And how patient are you going to be that it actually arrives? I go back to what I said to our other guests at the beginning of the program. This was one of the hallmarks of this administration coming in. Granted, it's only March, okay? But with all the tariff twists and turns, the good stuff, as I phrased it as earlier, tax cuts, deregulation, just keeps getting pushed further and further.
So look, I've been in about 12 countries in the U.S. and Europe the last 2 months. The biggest pushback was the, quote, chaos. The chaos was so much policy uncertainty at the same time. So the investor sentiment was like, we're going to step aside from the chaos until it resolves itself, and then we'll step back in. And if we're having this conversation as July 4th, Scott, then forget the bank thesis, forget the thesis, because right now you have a degree of paralysis for big mergers, for big CapEx spending, and that propels capital markets and lending fees and lending revenues and things like that.
So you think it's still a risk?
It's absolutely a risk. This is a critical junction right now, critical juncture. Like the Washington, D.C. needs to resolve the policies so the participants know the rules of the game. And if you don't know the rules of the game, then people are going to step aside. So I think, you know what my analogy here is, Scott? When Jamie Dimon took over as CEO, the first thing he did is he highlighted all the bad things. He brought them out in the open, and he said, we're going to deal with that. And there might be some pain, there might be a transition period, but that will create longer, higher, sustainable returns. So it's kind of like that, short-term pain for long-term gain. The problem is there's no one Jamie Dimon to execute it, so that's the key risk, execution. But I think in Scott Bessent, we trust. The Treasury Secretary has set a tone for financial discipline. In fact, if you want to go way back in time, maybe Scott Bessent can become the Albert Gallatin of Treasury Secretaries. He was the Treasury Secretary under Thomas Jefferson. He actually had a surplus. He helped create a surplus. So we're talking about reducing the deficit in half as a percentage of GDP. So lower rates, deregulation, and you're already having inflection at banks in revenues, efficiency, and returns. And EPS was negative the last 3 years. We think it's going positive. The deregulation is just icing to a good bank story.